everyone, Krug's here from Ace Trading. Today I wanted to run a quick how-to video to explain a bit about slippage and how it can affect your futures trading performance using bots and other automated trading strategies. This has been a question we've had from members, so I wanted to answer these questions and hopefully set you on the right pathway in regards to slippage and trade execution. So slippage is a term used to explain the difference between a fill price and the actual fill price, so what you expect to get and what you actually get. So you can get both positive and negative slippage, depends on your take profit and your stop loss. Normally heightened volatility from market opens, news events, and spikes in the market cause this slippage. And most common types of slippage and errors come from orders being filled, so the initial order being filled, so you're in an open position, but price moves past your take profit or your stop loss without the time or the available orders to fill that TP or stop loss. So they're the most common problems that we have with slippage. So slippage generally occurs when you go to execute a market order. So for you could be 2, 3, up to however many contracts, but you're trying to find that price. And what you find is, in order for an order to be filled, you need to have the limit of the orders available in order to fill that price. So that's sometimes why you get a worse price than expected. It's just part of what every trader has to go through, and I guess as scalpers, we tend to find it more common than going for those big wins. Well, the best way to probably explain it is using a DOM. So this is the DOM from NinjaTrader. So the DOM allows us to see the different prices, and then also the orders that are sitting there are ready to go for us to trade with. You can see that price is in the middle if you haven't seen a DOM before. So price is in the middle there at that. This is an ES DOM from back when it was at 1968.25. On the right hand side there, so I'll use my mouse, you can see there's 29 contracts to be filled, 978, 1,246, and so forth. So if we want to move price upwards, those 29 orders need to be filled. Okay, and then once you fill those 29, the price will slowly move up. And then vice versa if you go the other way, 2 and 397 down. Okay, so if we're trying to put an order in, so let's say we are in a short order. We've entered here at 1968.25, and we have a take profit down the bottom there at 1967. So that's where we've got 3 contracts in. We need to fight for those contracts. We need to make sure that we have the fastest internet possible, and we can actually access those contracts before other traders. There is an order, and we just hope that we are not at the end of that list of traders trying to access those contracts. However, say for example we were able to access the 249th and 250th contract, that means that we would need to catch, if the price was moving down, we would probably slip into the next price of 1,966.75 to fill that third contract. If there was no contracts, nothing available there, it would move down further, and it can move down quite far depending on availability. So you can see how slippage can occur, but it all depends on what's available in terms of orders. So slippage will occur if you manage to trade more contracts than what is currently offered at the price you are trying to execute. So in that previous example, if you traded 7 contracts, you would have created slippage with all 6 at 2,925, and then you'd have to fill, add one above that, one tick above that. So if we're looking at a specific NinjaTrader slippage strategy that you would find with using one of the bots from Ace Trading Strategies, but also from any bot, from any company, everyone still has the exact same problems, and that's why it's really important that we have a managed approach. And you will notice that after all our bot names, we have the word managed, which means that we need to make sure that we are managing all the strategies in place, because errors and slippage can occur and bots can shut down. And I'll talk a bit about why bots shut down and what NinjaTrader does to handle that. So you can see below here there is an order in place. Okay, so what we're hoping is that price would raise up and hit that order. If price comes up and there's no contracts available at that, it would have a bit of slippage. But you can see that it will be filled, hopefully filled at that desired price. But if it moves too fast to fill the TP, an error will occur. So what happens is the error. I'll talk a bit about order. I'll talk a bit about orders and the length of time it takes for that to go through in order to hit the market orders. But once that order is open, you have to place then a TP into the market. And if that happens all too quick and prices move past your TP, you're going to get an error. Okay, and that error looks something a bit like this, and some members have experienced this in the past. So I have experienced this, and there's not much you can do about it. It's just NinjaTrader and the way they handle their errors. So in this instance, the surfer bot placed an order which was filled, so we entered the order, but then price moved past the 3-tick take profit too quickly for it to be filled. So NinjaTrader cannot place the order, so it runs an inbuilt protocol which shuts down the strategy. Okay, pretty much just shuts you down and leaves you in that trade. And that is something that all traders have to deal with if you're trading with NinjaTrader. And that is one of the reasons why I run my personal accounts with MetaTrader 5, so that it doesn't have those errors. They handle all their errors very differently. Okay, so ways to manage that slippage. Try not to trade those volatile times, such as opens and news. Saying that, it doesn't mean you can't trade them. If I was going to trade those high volatile times, I would make sure that I was watching the bots in those times. We use a managed system. So as I said, we use a managed system. I wouldn't leave the bots for too long. What will be available for long-term members at some stage will be an unmanaged system, which will allow the bots to be left a bit longer, but it obviously takes a bit. It's a lot more to code, and there's a lot more involved with setting up an unmanaged system, but it is available, and it will be available to long-term members. As I said, don't leave the bot too long without checking on it. That's just the managed approach. And then the end goal is to earn your money with Apex and NinjaTrader, and then take your earnings, take part of your earnings and take them over to a personal account in MetaTrader where slippage is handled better. I have no trouble with slippage at all with MetaTrader, and I've been trading them for a number of years. I'm using my personal accounts. They just have different ways to handle it. So if we want to go a bit more detail here, let's talk a bit about the path of an order and why we do get this slippage. Like, why do some people get their orders in quicker than others? Well, if you think about your order, when you place an order on the right-hand side here, if you place an order in NinjaTrader, first of all, NinjaTrader must check the conditions of the order and read input from Rhythmic and CME about the availability of contracts in the trade. So it's taking that order, initially putting it in, okay? And then the order, once it's gone through a set number of protocols with NinjaTrader, it is then sent to Rhythmic. Okay, the order is submitted by NinjaTrader and then sent to Rhythmic as requested by Apex. So it's already gone through a number of hoops, or jumped through a number of hoops before it has even placed the order. Okay, then orders need to be checked that the trading threshold is available, account details are correct, instrument and order sizes are all correct, and everything is confirmed by the parameters of Apex. So it's already jumping through an extra few steps in regards to placing that order compared to a personal account. Okay, that's why you often find these funded accounts do have a lot more slippage than your personal accounts. Okay, once it goes from Rhythmic, we're then going to send that order from Rhythmic to CME Group, which is where all the data is collected for futures trading. Okay, so they're in charge of the market data for futures. It's held in Chicago, so if you have your computer is in Chicago, you are connected to the internet closer in Chicago, you're probably going to find you have a bit less slippage, and I'll talk a bit about that using my VPS. But the market data will determine how many contracts are on hand and place your order with that availability. And then your order must travel all the way back through the groups, back through Rhythmic, back to NinjaTrader to then say, okay, order is filled, now place the TP. And that's where we're getting that problem of slippage, because often it takes, we're talking microseconds, but it can take a few microseconds to get that TP placed, and price and we know how quickly price moves. It can just spike up and you can miss that opportunity to have your take profit put in place. Okay, so that's the pathway it does take. And you can see that here. And often it goes on that pathway back to NinjaTrader, that is when you're going to get your errors. Okay, so the order Once order is confirmed, it goes back, has to put in your TP and your stop loss. So what happens if it moves past the TP? Well, it tries to place your TP a number of times. It doesn't just do it once. There is a number of times it does it. But, and this is a real short one because we generally aim for 3 ticks when we're scalping. And you generally get this. This is the area you sometimes get with those high volatile times. You're now stuck in the trade with no exit point. And again, thanks to Ninja Trader for that, but that's just what they do. They just terminate themselves. That's just how they handle their orders and their slippage, and there's not much we can do about that, apart from using an unmanaged approach, as I said, which will be later on. So advice going into that is to not trade those volatile times and keep an eye on it for now while you're learning to use the bots. Okay, we are in the initial stage 1 of getting used to the bots and learning about how to backtest and all this, and how to use the bots to begin with. Ace trading isn't all about giving you all the bots at once to confuse you. We want to give you a number of bots to start with and then slowly roll out more bots. Okay, but key things to note: slippage is unavoidable. Every bot with every company has the same situation. Okay, you're not going to find that's just our problem, it's everyone's. Okay, I use a VPS which is based in Chicago, which does help my internet lag, and I use MT5 for my personal account, and that is super quick. You can see my ping, 1.89 milliseconds. And when you do backtesting in MetaTrader, you can actually identify and trade with different types of timing. So I could trade with my backtesting doing 100 milliseconds, which may be what NinjaTrader may be using. Obviously, it's different from where you are in the world and how far the internet has to travel, so how fast the order has to travel. But we're talking about microseconds here. Okay, but I just wanted to give you an insight and say, look, we're just starting with a few bots. We've got the Wave Breaker, the Wave Rider, and the Surfer. I want you to feel comfortable with them. I want you to feel on top of those bots before I start rolling out the cutback, the whitewash, and other bots, accumulation bots, the set. And I've got a number of other bots that I'm looking into about wave predictors. But they are more complex, and it's time for us to feel comfortable with these bots before we move on to the next ones. And as I said, long-term members are just going to have those options to move across to MetaTrader and have a lot more options to be able to move into the different groups. It's all about a long-term trading journey here. We're not in it for the short game. There's no point making $1,000 and then just losing it all. We want to have consistent earnings over a number of years, 20, 30 years, so that we can then profit in our lifestyle from that. Okay, but just a quick short how-to. Hopefully that answers a few questions about slippage and more how-to videos to come. Thanks, Krugs, signing off.